Hello and welcome to This Week in Markets. It was a classic tug of war for Indian equities this week. The benchmark spent most of their time navigating a choppy range-bound environment, but thanks to a late week push from global markets, they managed to scrape out minor gains. By Friday's close, Nifty ticked up 0.3% to land at 23,719, while the Sensex nudged 0.2% higher to finish near 75,415. On the global front, a couple of major macro shifts kept investors on their toes. Optimism surrounding the US-Iran peace talks helped pull Brent crude prices down by roughly 6%, with oil settling around $102 to $103 a barrel. While that drop offered a bit of relief to inflation-wary markets, the real fireworks happened on Wall Street. Driven by a blowout first quarter earnings from AI bellwether Nvidia, tech stocks ignited a massive global rally. That momentum was enough to push the Dow Jones past the historic 50,000 milestone for the very first time. Back home, the currency market saw some heavy defensive action. Early in the week, the Indian rupee faced intense pressure, tumbling to a fresh historic low of 96.96 against the US dollar. That forced the RBI to step into the spot market, selling an estimated $2 to $3 billion to defend the currency. The intervention worked, cooling off speculation and steering the rupee back to 95.68 by weekend. But the headline grabber of the week was RBI's record fiscal bounty. The central bank approved a massive surplus dividend transfer of 2.86 lakh crore rupees to the central government for the financial year. This gives the government significant financial cushion to handle high energy costs and manage the domestic budget without stretching its deficit. Turning to institutional fund flows, the actual provisional data from the exchanges tells a much sharper story than early weekly tracking. When you account for Friday's accelerated sell-off of over 4,440 crore rupees, foreign institutional investors actually pulled out a net 7,572 crore rupees from the cash market this week. Once again, domestic institutional investors did the heavy lifting to keep the market stable, countering the foreign exit by purchasing a net 16,948 crore rupees. In May 2026, so far FIIs have offloaded nearly 30,000 crore rupees from the Indian market. Looking at the bigger picture, foreign institutional investors have now offloaded more than 2.2 lakh crore rupees in the first 5 months of 2026 alone, outpacing the entire outflow recorded throughout 2025. Coming to sector and stock specifics, IT was the undisputed star this week. Riding the wave of global tech optimism, the BSE IT index surged 4.1%. On the flip side, defensive and commodities took a backseat, with FMCG losing 1.5% and PSU stocks dropping 1%. In terms of individual stock moves, the top gainers on the Nifty were led by Grasim up 7.5%, followed closely by Wipro at 6.9% and Infosys gaining 5%. On the losing end, Power Grid shed 3.8%, Tata Steel dropped 3.5% and ONGC closed 3.1% lower. As we look into next week, all eyes will be on the final layout of the month. We are approaching the tail end of the corporate earnings season, which means the macro triggers are going to take center stage. Traders will also be repositioning their portfolios ahead of the high volume MSCI May rebalancing schedule for May 29. From a technical standpoint, the Nifty is currently consolidating within a tightening corridor. Immediate support sits firmly around 23,400 to 23,350 zone, where buyers have previously stepped in. On the flip side, the index faces a tough overhead ceiling between 23,850 and 23,900. The big question for next week: will the combination of cooling oil, the RBI's record dividend payout, and steady domestic liquidity be enough to give the bulls the fuel they need to break through the upper resistance? That's all from our side for the week. Thank you for watching, and we'll see you next time. Don't forget to follow Fortune India to keep track of all the latest updates from the business world.